Today, we're going to look at using our money to make more money. So, we call this investing. Now, remember, investing is not the same as saving. Saving tries to keep your money, investing tries to make money. So, saving, we want to keep our money, we want to accumulate it, we want to save it for something in the future. Investing really is looking at making more money over time. Now, we have different areas. We have your options, your personality, and your habits. So when it comes for using your money to making more money, let's look at some quick options. You can buy stocks, bonds, precious metals, real estate. Now there's equities and derivatives, and there's all kinds of mutual funds and ETFs and collectibles. Lots of ways to make money. But the most popular are stocks because they're easy to buy and sell, and you can trade them regularly. You can buy ownerships in companies that you like and use. There's bonds, which pay a fixed percentage rate typically. So you're pretty consistent on a bond. Bonds are everywhere, by the way. They're the most widely traded vehicle. Way more bonds. I don't remember the numbers, but there's basically millions and billions of bonds being traded all over the world, and then stocks are traded on the different markets. Now we have gold, so you can buy gold physically. You can buy an ETF of gold, like GOLD. You can buy gold miners or silver, or precious metals. There's real estate, which is a great way to accumulate wealth, especially since you can live in your house. So there's lots of options. So you want to educate yourself on different options. You can look at our 21 different investment vehicles. We talk about 21 different ways to invest your money. The second most important, I believe, is your personality. What is your risk tolerance? Now we see here on the far left, we have passive and active strategies, value investing, growth investing, income investing, dividend, contrary investings. Lots of different ways that you can invest your money. We'll cover these in the future, but right now, basically what you want to know is, are you like a physical holder? Do you like to hold on to things like gold or collectible real estate that you can get your hands dirty with, right? So are you one of those investors that likes to hold things physically? Or maybe you like income. This means income investing means you're buying a bond or a CD or a stock that pays a dividend, meaning whatever you're holding is paying you something, right? You're not sitting on a Beanie Baby hoping the price goes up. This means you're on a bond or a CD or a savings account that actually pays you regularly, right? So we call that income. Maybe you're one of those like risks, maybe possible higher returns. Remember, the greater the risk, sometimes the greater the reward or loss. You can start a business, new technology, startups. These are more of a risky type, what we call a growth stock. Now, are you hands-on? You like to be part, and you actually like to work with your investing? Do you like to spend time researching them? Are you hands-off? Are you an individual stock or bond type of person? Or do you want others to manage, like an ETF or a mutual fund? I like to personally manage my own assets, and I find that more enjoyable, but it's up to you. So know yourself. What kind of investor are you? Now then there's your habits. Now you have to habitually save or habitually become an investor. Make it a habit. Open an account with, Ameritrade or Interactive Brokers, Robinhood, E-Trades. There's all different kinds of places you can go and open a trading account. Okay, so you can choose, you can see these different ones. A lot of them have free accounts where you actually don't pay for your trades, but they make their money other ways. So please do some research on opening your account. Set aside some money regularly, right? And then as you set this aside regularly, remember, wealth is usually accumulated slowly. Very few people get lucky and win the lottery, right? So it's a slow process. And do your research. Now, remember, before you choose a stock, at the very top in the green bubble, understand the business model. What are you investing in? Analyze the industry. You can check for advantage in competition, like, is Apple better than Samsung? Where's a competitive edge? know about the management, go through the corporate governance, analyze their income statements and balance sheets. It's very good to look up that. We'll do some information on that later. Look at their performance review, how they've been doing over the past 3 or 5 years, and quality of earnings, especially what are they going to do in the future. Remember, investing is always looking towards the future. So make it a habit, okay? Sixth thing we're going to look at here is patience. Investing takes patience. It's the time in the market, right? Remember, we have simple interest where basically if you get 10% every year, so you would basically get the same amount on your investing, right? In a simple investment. It just increases 10% every year. Compound means your investment income, say 10%, is lumped on top, and the next year you get 10% on your added 10%. In other words, you get 110 the first year, but then your 10% is on $110, which means you get 121 the next year. And the more it goes, the higher it gets. So now you have $121 in 2 years, and you're getting 10% on that. We call that compound interest. More on this later. This is what time in the market will do you, especially for dividend investing, right? So remember that. Now, are you going to sell it? You're going to hold it? A lot of times we should sell the losers and keep the winners. A lot of times we do the reverse, because we're like, I don't want to lose more money, so I'm going to sell off my winners, and I'm hoping the losers come back. I say sell the losers and keep your winners. Now, younger investors would focus on risk and growth, obviously. Us old guys would want income and safety. We don't have a lot of time for our stocks to bounce back, our investments. And remember, money takes time. Work makes you money. Saving helps you keep your money, and investing helps you increase your money. So remember that little adage there. We're going to look at dividends. Now, dividends are my favorite way to make money. Now, a dividend just means something that's paying you regularly. We call that a dividend. In a bond, we call it a yield. Yield and dividends sometimes are used interchangeably. Dividend means that something is paying you regularly. Johnson & Johnson, General Electric, Pfizer, most of these older companies pay a dividend. There's a thing called a dividend reinvestment plan, or a DRIP, where they automatically buy the stock with the money you get in dividends. That means every time they give you money, say $100, they take that money and they buy more of the stock. So your stock holdings go up, and as the more stocks you own, then you're having more dividend because you have more stock. The numbers go higher, so you're increasing your money on a compound rate. Okay, so reinvesting dividends on those long-term holders is a great way, unless you need the money. If you need the money, then collect the dividend and use that and keep your remaining money in that stock. Now, your interest just is a percentage rate. So on a bond, there's an interest rate, say of 5%. That just means the yield is 5%. Interest we have on CDs and saving accounts. That is one way we can make money through investing. The other way is what we call equity. Equity is basically meaning that you're buying low and you're selling high. You buy a stock at $10, you sell it at $15. You basically made $5 for each stock that you bought or sold. Same thing with real estate. You buy a property, maybe it's worth $200,000. If you sell it at $300,000, we call that equity. You made profit that way. In real estate, we also can refinance things and use the equity. So basically what we're looking at here, when you're using your money to making money, we call that investing. There's many vehicles you can invest in. So check our 21 investment opportunities video and try to follow this little guide here to educate yourself. Please be patient and look at the different ways that you would like to get your income, or if you'd like to maybe get some growth out of your investments. So we look forward to see you in more of our videos. Go ahead and like this video or join us here at Ideas for Better Living.